I'm Bronwyn Lipscomb. Welcome to my monthly update for the month of March. Many people are asking me what are the implications of the Banking Royal Commission's final report? Is it going to be even harder to get a mortgage now? In essence, the recommendations aren't really new news. Getting a loan had already become harder from late 2017, with the various stages of regulations handed down to lenders by APRA. Banks and other lenders have already made changes to the information they require and the way they assess loan applications, including more detailed verification of income and expenses. If you're applying for your pre-approval now, you need to allow at least 4 weeks, and you may well be granted a limit that's up to 20% less than what you previously were approved for. This lack of access to credit is actually one of the key drivers behind the declining market. Commissioner Haynes deemed that no changes were required as the old changes had already done their job. One of the surprises though was the way that mortgage brokers are to be paid going forward. The Commission found that not all of them had been acting in the client's best interests. Brokers currently get paid a percentage of the loan amount, meaning they make more money if the borrower takes a bigger debt. They also receive trail commissions, which is an ongoing payment for the life of the loan. Commissioner Haynes bluntly called this money for nothing. He recommended that this practice, along with commissions of any kind from banks to brokers, should end within the next 2 to 3 years. This will significantly change the broking industry and may result in consumers needing to pay a broker for their services. Depending on which government wins at the next federal election, will determine the extent to which these recommendations become legislated. Now to what's happening locally. Each month I'm going to pick one suburb and share the stats for the prior month so you can see how the market is really performing on a micro level. This month, let's look at Pymble. There were 13 sales in Pymble last month, not a bad number for the first month of the real estate year, with 6 being houses and 7 being apartments. One of those sales was my listing in Livingstone Avenue, a modern 2-bed apartment with treetop views. As an example of an outstanding result amidst a difficult market, that owner made a 26% profit after buying it off the plan and only settling on the purchase a year ago. There were only 4 properties put up for auction in February in Pymble, all of which were houses. 2 of them passed in, so that's a clearance rate of 50%. Currently, the median price for Pymble houses, based on the past 12 months, remains comfortably above the 2 mil mark at 2.2 million. For units, the median price is 885,000. Average days on market are tracking reasonably well at 33 days, but this is a 12-month average, so this may start to extend out as the year goes on and the market downturn deepens. If you'd like to discuss the market in further detail and how it relates to your property, please don't hesitate to get in touch.